things.
Yeah.
So welcome everyone. My name is Holly. I'm the MD of BIMA. This is the first of most probably many what we're calling BIMA Hangouts. So these are really events where we are going to aim to bring together a specific group of experts around a topic. So today we have finance, tomorrow we have law, and so at 10 a.m. we're covering everything to do with corporate and finance, contractual issues, employment related issues, terms for force majeure, etc. So if you want to sign up to that one, that's at 10 a.m. tomorrow morning. And then on Friday, we have one at 10 a.m. on health and wellness, how to take care of your dispersed teams. But today, we're really happy to welcome Esther Carder and her team from Moore Kingston Smith. Esther is media specialist partner at Moore Kingston Smith. But she is also BIMA treasurer, so a highly valued part of our governance team.
Thank you, Holly.
But we've got a number of people covering off literally everything you could possibly want to talk about. We've also been collating and collecting your questions as you register. So they are all geared up and prepared to talk around a lot of the common themes, and I think there were a lot of common themes, so a lot of people were asking very similar questions, so that's good news in that we should be able to cover a lot today and meet your demands. So before I pass it over to Esther, Ant, who is our tech man, do you want to say anything about how things are going to progress or the format of today?
Sure, I'll be super quick before Esther kicks us off. Thank you first for everyone for joining. We've got 50 plus people now, which is awesome. The way it's going to work is that Esther's going to lead a discussion. We've, as Holly said, we've sourced some questions beforehand to answer and tackle head on. That will last as long as it does, hopefully about half an hour, 40 minutes, and then we will open up for questions from the audience. So you should be able to see a Q&A option at the bottom of the screen. Make sure you type in your questions there. And when it comes to the Q&A session, we'll be pulling out those questions and asking our panelists. So stick around. We also have a chat function. If you want to leave little comments or anything like that as well, feel free to. And hopefully we're going to try and do a poll at the end as well to kind of see where you guys are at, what you want from the next session potentially. So yeah, so stick around. We're trying to answer your questions, so yeah, keep asking stuff, and we'll try to answer everything, as many as we can. But without further ado, Esther, if you want to kick us off, we'll get started.
Thank you, Ant and Holly. Good afternoon, everyone. I hope everyone's bearing up okay through all of this madness. So yeah, obviously we want to do what we can to support BIMA and its members. So we've put together a panel of experts today to help you out with some various questions. As Holly said, there were quite a lot of common themes. So what we've done is we've grouped the questions together. I'll ask them of our panelists. Obviously, there'll be things that maybe we don't cover that you would like answered. So yeah, do type in questions as we're talking, and then we'll pick out some of those questions to ask once we've gone through our bits and pieces. So today we've got Tim Stobbold, who's one of our tax partners. We've got Paul Winterflood, who's from our corporate finance team. And we've got Ian Robert, one of our insolvency partners as well. Hopefully, by the time it gets to her bit, we'll also have Amy Cresson, one of our HR consultants. She's having a bit of a problem logging in at the minute, but we're hoping that we'll do her last, and we're hoping that she'll be with us by the time we get to her slot. So, I think that might be her now. So to get going with the questions then, first of all, we're going to hear from Tim Stobbold, one of our tax partners. And I've got a few of the questions here that you have all been asking. So Tim, are you there? Yeah. So Tim, can you tell us a bit more about this government job retention scheme that the government have recently announced? Because I think this is probably one of the newest things that people are less familiar with.
Yes, this was the announcement on Friday from the Chancellor, and it had been trailed for some time. There was going to be some sort of employment support. That's employment and not freelancers. I've seen we've had a question in on freelancers, which we'll come back to. So these are people who are on a payroll. The Chancellor was at pains to say it only applies to those people on a payroll. And what we've been told is that for all businesses of all size, up to 80% of the salary cost will be met by a grant from government with a cap of £2,500. Now, there's some debate about whether the £2,500 cap is a cap of the grant or a cap of the salary cost, but well, we're hoping for some clarification on that today. This is a good announcement as far as employees go, but we're not expecting the money to arrive from these grants anytime very soon. The revenue are having to, or the revenue and the government are having to build a system which is going to allow businesses to, first of all, designate employees as furloughed, this wonderful new word that we've had to learn, furloughed, temporary leave of absence. And during that period of being furloughed, that employee cannot do any work for you. So you would first of all have to designate them as furloughed through this new system, as yet unreleased. And then at that point onwards, you'll start to accrue entitlement to this grant, and anybody who's already in a position of being furloughed, this whole grant system is being backdated to the 1st of March, so it's already in place officially. I think the difficulties we're seeing so far are employers may want to reduce down the working hours of their employees, so maybe cut a 5-day employee down to a 2.5-day employee. They don't qualify for this grant because they haven't been furloughed. Furloughed does appear to be very strict in that they cannot do any work. So it's putting employers in quite a difficult position that in some ways they're going to be better off if they actually put their employees on the bench and send them home rather than actually give them some work to do.
What about statutory sick pay as well? There's some benefits around that, isn't there?
Yeah, I mean, statutory sick pay was one of the early announcements right back probably to the 18th of March, sounds like a very long time ago now, where we were told that statutory sick pay, rather than being paid from day 4, will be paid from day 1, and that payments that are made for up to 2 weeks per employee who is off ill, either self-isolating based on government advice, caring for somebody else who's ill with the coronavirus or is self-isolating, or if they themselves are ill with the coronavirus, the statutory sick pay can be paid from day 1, and then ultimately up to 2 weeks per employee will be reimbursed by government. Not forgetting statutory sick pay is £94.25 per week. So these aren't big numbers, but it's some help. That refund of statutory sick pay will also take quite some time to come through. So in the meantime, what we're advising our clients is just to keep very good records of who's off and when and what payments you've made. So when the portal is open to reclaim it, you have everything you need.
And with the government job retention scheme, does the business have to get into a position where it's actually making a loss before it can claim it, or is it literally a case of having furloughed the workers?
No, I mean, all the guidance is hopeless at the moment, but as far as we can see so far, all that the employer needs to do is designate their employees as furloughed. When we come on to Amy, hopefully she can talk about what that means when you have the discussion with the employees and what steps you need to go through. But really, it's for the employers to do this, to list all their employees top to bottom, work out which ones they can keep occupied, which ones they can't, and those they can't, they can furlough those employees and send them home to sit on the bench on 80% of earnings, up to the £2,500 per month.
I suppose the nervousness that some businesses are going to have is that, you know, this grant won't come through until a couple of months down the line, and there'll be a nervousness about paying this amount out and then finding out that perhaps you haven't qualified for it.
I completely sympathise with that nervousness. I mean, the grant is 80% of the wage cost, and again, a matter of fierce debate since Friday is what that means. If what we're saying is an employee is going to stay on a salary of £2,500 a month, the grant will be £2,000 a month, but the employer appears at the moment to still be on the hook for the employer's national insurance, the pension contribution, apprenticeship levy if it's an employer of that size. So even with an 80% grant towards the wage costs, there are still other costs of employment which the employer is going to incur. And if they fall through one of the conditions of this scheme, when they put their claim in later, they may find this grant isn't available to them. So a lot more clarity is needed around how the scheme's going to operate, which we're hoping to get later today.
Yeah. And obviously that covers employees, but obviously a lot of agencies, particularly digital agencies, use a lot of freelancers. I mean, what is there to support them?
Not a great deal, and this is the next great cry to government to do something to support the self-employed. At the moment, if somebody's self-employed, they've got a tax payment to make on the 31st of July, and the government has said, well, they can delay making that payment until January next year, but being told that a payment which isn't going to fall due for 3 or 4 months can be delayed further is not giving them any immediate sort of benefits now.
Yeah. So there are some other supports that the government are giving around time to pay and around the VAT and PAYE income tax. Tell us a bit about those.
Well, on the what do we go back? I think back to the 18th. No, the budget even. Sorry, I'm trying to put these things in order. In the budget, we had the coronavirus time to pay hotline opened. This was 2,000 highly trained call centre operatives there to receive your call and to agree delayed payment terms for tax. That became very popular very quickly, and in the first few days there was a very inconsistent approach. So 2 of our clients would be ringing up within an hour of each other and agreeing something very different. I think to take some of the pressure off that time to pay line, we've got 2 specific measures now. One around VAT, which is VAT payments falling due between the 20th of March and the 30th of June. Now don't need to be paid until the 5th of April 2021. And then there's also the payment on account for self-employed people can be delayed until 31st January 2021. So those are 2 immediate measures for deferring of tax. However, if you wish to defer more of your taxes, for example, your monthly PAYE, your corporation tax, anything else you're due to pay the revenue, you need to get on to the time to pay hotline. I won't give the number out here, I haven't got it to hand, but if you Google coronavirus time to pay HMRC, it takes you right to the telephone number. Be prepared to wait for up to a couple of hours to actually speak to somebody. These 2,000 people are being kept very busy. Without wanting to say there's any automatic deals that can be done, a lot of our clients have managed to get up to 3 months delay on their PAYE payment. So in the rush up to Friday, when the PAYE was due to be paid, a number of people got a 3-month holiday from having to pay that, which gave them some immediate cash flow.
Yeah. I mean, certainly I think what businesses have got to be aware of is that this is just a deferral, VAT and the PAYE holidays. This is not government saying you don't have to pay it. This is government saying you don't have to pay it right now, but you will have to pay it further down the track. So businesses need to be building into their cash flow forecasts and working out how they're going to be able to settle it further down the line. I mean, Tim, what's your expectation around come next week of April or come August when your PAYE payments are due, letting people enter into some extra time to pay or paying it off over a period of time?
Well, I think the track record of the revenue is they will generally agree to instalments, but those instalments will be agreed by direct debit. The revenue are going to want the ability to collect that money, and for not to be need an action by the company to pay it. Of course, they can always cancel a direct debit. But if I give you some examples, our clients who are ringing up the time to pay hotline and deferring their corporation tax, that was being deferred, sort of amounts in the high tens of thousands were being deferred over 10 months. So when these liabilities fall due, agreeing some sort of deferral over up to a year in installments, but that does, of course, work on the assumption that the cash flow of the business is going to be improved by that point.
Yeah, and is there going to be any interest racking up on these deferred payments?
Again, the guidance is hopeless on it. On the delayed payment on account for self-employed people, it says in the guidance, no interest, no penalties. But on everything else, it's been silent. So I'd work on the basis interest will accrue at 3.25%, which is the standard rate at the moment.
Okay, we've got a question that's come in around the job retention schemes. The question is, are all businesses eligible for the 80% grant, or is there some restriction like the leisure hospitality industries that we've seen for things like rates?
It's all businesses. So there's no size criteria. There don't appear to be any excluded trades. So no, it's everybody.
Yeah, okay, great. Thanks, Tim. Paul, are you still there? I think you need to take yourself off of mute.
Yep, still here.
So, Paul, tell us a bit more about the Coronavirus Business Interruption Loan Scheme and how that works, and sort of what are the criteria to qualify for that scheme?
Yep, hi everyone. So over the last few weeks, the government has announced this the government announcements around this have evolved. So in the budget, this was first announced where they announced they were going to allow up to loans of up to 1.2 million. That's now been increased up to £5 million now. What these loans are loans for certain businesses, which I'll get onto shortly, but the government will be backing 80% of the loan. That's to encourage the banks to actually lend. The borrower is 100% is still 100% liable for those loans. The Coronavirus Interruption Loan Scheme, or CBILS as it's being shortened to, it replaces the Enterprise Finance Guarantee Scheme, which came out in the wake of the banking crisis 10 years ago. The scheme actually went live as of 12 p.m. today. So in terms of information out there's quite a lot of information on the British Business Bank website. But the conversations that I've had with banks, they're expecting the scheme to continue to evolve as the banks put in place their processes. In terms of further information about it, there's no interest repayments or fees for the first 12 months, which is clearly a nice incentive for people who do take out the loans. The first 250,000 of loans are unsecured, but then above that, the bank will be looking for security, and that's the level of security required is very much down to each lender's and each bank's discretion. Other the banks have been saying to me is that they're expecting to be in with. They've only got a certain amount of money that they'll be able to lend to people, so they're going to have to prioritize their own clients initially. So if you are thinking about taking out a loan, it's best to speak to your it's best to be speaking to your relationship manager and relationship director initially. Banks have also increased the scope of their relationship directors and managers, so they now have the ability to extend any existing credit facilities that they have. So if you've got an overdraft or you've got an existing loan, then the banks will be encouraging you to increase the size of that overdraft, or maybe they can offer repayment holidays on any existing loans at the moment, before progressing with any applications for additional loans through the CBILS scheme.
Brilliant, thanks, thanks, Paul. And what sort of, what sort of information are the banks going to need from businesses in order to support these loan applications? So
the most important thing the banks will be asking for is a 13-week cash flow. So in a 13-week cash flow, in this you'll show all your expected receipts and payments. The more detail you can show in this, the better. So you should be showing all your. So for instance, if you're expecting to. It's best not to have receipts in one line. If you've got, it's best to analyze out all your debtors in various lines. So you can, so for instance, your top 10 debtors, if they're the people paying, then sort of having it analysed on a line by line basis, showing exactly which date you expect all of them to pay, then all the better. Also, it's good to keep that documentation up to date. In terms of additional information, the banks are only going to be lending to people with that had viable businesses before the coronavirus crisis started. So you're going to need to evidence that the business was profitable prior to the start of March. So they will be asking for historic information as well.
Yeah, and presumably banks are going to want some reassurance, given that the government is only guaranteeing 80% of it for them, some reassurance that the businesses will be able to return to profitability once this whole pandemic is over, which is going to be tough for some businesses to be able to demonstrate. And what about other schemes? So I think the coronavirus business interruption loan scheme is just for businesses with below 45 million turnover. What about those that are bigger than that?
So there's also a scheme for businesses over 45 million. So there's less information about this one, but there's a corporate financing facility which is being put in place to help those businesses. For this scheme, businesses will be selling short bonds to the Bank of England. The key criteria that's out there at the moment is that businesses again need to be able to demonstrate good financial health prior to the 1st of March 2020, and to be eligible, you're going to probably need some sort of credit agency referencing. If it isn't in place, then there are processes to enable you to be able to do that. If people want additional information on that scheme, I can, if you drop me your contact details, I can find out more as we find out about it.
Thanks, Paul. I think the message here, even if you don't think you're going to need any of these additional loans from the government, that you should be keeping really detailed cash flow forecasts and monitoring them on at least a weekly, if not a sort of a every other daily basis, because I think this is going to get a little bit worse before it gets better, and so you've got to have a real handle on what your available cash flow is and your finances. Before we go on, we've got a couple of questions that I think I might have missed at the time when Tim was talking. So Tim, are you still there?
Yeah, I'm sort of answering them live as we go. So if you have a look at the questions in the Q&A, you should see my responses. If there's a trend of them, I'll raise them, or if there's any that people want to be discussed in the panel.
I mean, I think the one on deferral of the PAYE, is that a monthly call, or are we going to be able to get it agreed for longer than that? It's a good one to just answer to everyone.
So the question is, if you are prepared to sort of invest a couple of hours in waiting on hold to speak to the time to pay hotline, what are you going to have to do that every month that your PAYE falls due? It's been inconsistent as ever in the first few days of it. The revenue were only allowing people to defer tax that they could see on their system was due. So you'd submit your end of month payroll records and then you'd ring them up to try and defer it. That was a nonsense. We found that after probably the 19th or the 20th, probably the 19th, I think, government gave the time to pay team a bit of a kick. And we saw that, I think it was fairly consistent feedback from our clients that 3 months deferred PAYE was possible on one phone call. To have that, you generally needed a good payment record with the revenue anyway. So if you're a persistent late payer, you'll probably find the revenue are going to give you a harder time. You ought not to have engaged in any aggressive tax avoidance such that you've been having a years-long battle with the revenue, because again, they won't be terribly sympathetic to you at that point. But if you've got a good story around how your cash flow will improve once the crisis is over, 3 months PAYE deferred in one phone call was certainly possible as of last week. Whether it's changed again now that the VAT deferment's been announced, I don't know, but it was certainly possible last week.
Yeah, thank you. And then what about, so somebody else has asked, they've got a couple of employees starting in March, so they sort of missed that 28th of Feb cutoff deadline. Are you going to relax things on that?
I don't know. The backdating to the 1st of March is supposed to be a helpful measure that if you've already effectively furloughed employees without knowing you furloughed them, then you're eligible for the grant. I think what the government will be paranoid about, as they always are, that people in my profession dream up wonderful ways to maximise their clients' way to benefit from these schemes, is I could take on a load of employees now and have it 80% grant funded by government. And I think that feels like there's some sort of nasty sort of avoidancy criminal scheme in there where you're just getting free grants from government. So I would have thought, whilst we're not suggesting for one moment anybody in this session is going to do anything that's non-commercial or is not in line with the rules, I would have thought there will be, for the job retention scheme, it will only be people who are on the payroll or have been in a PAYE submission in the February payroll. So those employees who've joined after the 1st of March, my gut feel is if the employer wants to do anything for them, that's at their expense rather than being funded by the grant.
Another question that's come in recently is about the job retention scheme, about the restrictions on different types of contract, whether people are full-time or fixed term, and how this affects people's benefits and pensions.
Okay, a couple of questions there. I think that the Chancellor was drawn on this in the speech when in the Q&A, and he was asked about 0 hours contracts, and he kept going back to, well, look, if they get a regular salary and they're on the payroll, then they will benefit from this scheme. I read that into, look, the furloughed employees, the salary that you can consider for the purposes of the grant feels like it's the basic salary, not overtime, not bonuses or anything else. So if we're looking, if the grant is based only on the basic salary, if you've got contract employees, let's say you've had somebody on a contract for 6 months leading up to the 1st of March, that feels okay. If you've got somebody on a 0 hours contract where you pay them some months and not others, you might find that runs into difficulty. Part-time should be okay, because even when you're part-time, you've got a regular salary through the payroll. The second point on pensions, once an employee is furloughed, they're still an employee. And they're still accruing all the rights they would normally accrue as an employee. They're still paying tax on what they're receiving, even if part of it is grant funded. So for example, if you've got somebody coming up to their 2 years of service with you and you furlough them in the last few months of their 2 years of service, they are still going to accrue rights for being unfairly dismissed, which accrue at the 2-year point. So if you are furloughing employees, I don't think, unless Amy's going to tell me differently, I don't think there's any hiatus on those employees accruing employment rights, pension rights, and everything else that goes with it.
I mean, the big question I've had, to which I don't think there is an answer, is how on earth is this going to be policed? How are the government going to know whether employees have generally been furloughed or not? I mean, I think it's just going to be a really difficult thing to police.
Well, or if it is policed, let's say that in a PAYE compliance review, the revenue turn up a year down the line and say, well, you furloughed these 50 employees. We're going to ask one of them whether they did any work whilst they were furloughed, and the revenue do quite often interview employees for lots of purposes to check that what the employer is saying is right. And if the furloughed employee says, yes, I was very helpful, I sent some emails and read some papers, are the revenue then going to withdraw the grant for the entire workforce? This is costing £10 billion a month. I think once the dust has settled, the government are going to work out this has cost them an awful lot, and they will go in with a sledgehammer to try and sort of smash up anybody who will be perceived to be abusing the grant system. So really massively on the side of caution. If you are furloughing your employees, I mean, even to the extent I'd chop them off the email system and confiscate any work mobile phones from them. You do not want any allegation later on that they did any work for you.
No. Thanks, Tim. Amy, are you there? I can see your name, but not your face. But maybe you're just on audio.
I know, I'm having some technical trouble, but I'm on the call.
You're on the call. Fantastic. Thanks, Amy.
Yeah.
So obviously there are lots and lots of HR implications for what's going on. And obviously many businesses, particularly some of the size of the businesses that are members of BIMA, won't have their own in-house HR professionals to sort of answer those questions. So a lot of the questions have been HR related, and I think there are a number of HR people on the webinar as well. So, I mean, what happens? Businesses it's got lots of work that needs doing, but it can't afford to pay people, or indeed maybe it's got no work for them at all. Just take us through, what are the options available to businesses to deal with this?
Yeah, of course. So depending on whether you have no work or some work, there's a slightly different process that you would follow. But in both instances, the very first thing to do is look at the contract. So if in your contract you have a clause that relates to layoffs or short-time working, you're in a brilliant position right from the beginning. So that allows you to put these things in place with just giving reasonable notice. It's usually around about a week, but your contract might say differently, but it tends to be around a week. And in emergency situations, you can sometimes bring that forward. So that allows you to put all of these measures in place, such as furloughing the employees without having to consult with them, putting them on short-time working, which I'll explain in a minute, laying them off, all with just notice. If you don't have it in the contract, that's absolutely fine. You've still got options, but you do need to get their consent. So ultimately, what we would usually say is you would have a consultation period with them, you would negotiate, but because of the situation we're in, the idea is that you don't have that time, and that usually tribunals will be lenient for that fact. So we're assuming that the perception at the moment is that if employees were to kind of take this further because you didn't consult with them for a fair period of time, the tribunals will see that you did what was reasonably practical in your business at this time. So don't worry too much about the consultation period, just worry about consent. So if you can get your employees to consent to these things, then that's key. So short-time working, for example, that means that your employees might work for 2 days a week, 3 days a week, and they're paid for the hours that they do. Layoff is full days that they don't work, so that's workless days. So if, for example, you need to lay them off for a couple of days a month, they would get £29 per day for the first 5 days in the 3-month period. So once it goes over those 2 days or over those 5 days paid, then it's unpaid. But that's if there is some work available to them. Another option might be a pay cut. So it might even be that you have 5 days of work for them, but you just can't afford for them to pay them all in full, in which case you can get your employees to agree to a pay cut. Now, the best way to do it, I know you're probably thinking, who on earth would ever agree to that? But the best way to do it is just to be really open with them, be transparent, kind of level with them, I guess. So explain what's going on in the business and why you're being affected and how you're being affected. Do it as positively as you possibly can. So, you want to look at all alternatives to making redundancies. You really want to give them an element of job security. You really want to keep them in the business. You want to keep them here so that obviously in 3 months' time, 4 months' time, when we're out the other side, there's a business for them to come back to. But you need their support in doing that. Explain that you'll be kind of taking part in that yourself, so you're in exactly the same position. It's just about being really transparent and really open. And in my experience, people are agreeing to it. So I've had countless calls over the last couple of weeks, and I haven't had a single company come back to me and say they've had people refuse. And if they have, it's been because of really genuine reasons that they're tied into childcare costs, for example, that they just can't get out of. And they've been able to come to some agreement with that particular employee. But ultimately, they're agreeing to it, and they're being able to kind of move on as a company collectively. And then if there's absolutely no work for them, then again, you're looking at furloughing the employees. And like I said, if you've got that short-time working clause in the contract, then you can just do it. And if you haven't, then they're talking about, all the legislation still applies. You still need to consult with them. But what we believe they mean in that instance, just for this period of time, is just get their consent, get them to sign something to say that they're happy to go for it.
Yeah. Certainly, that's been my experience of talking to clients where, in an ideal world, they would rather everyone just share in the pain and take a little bit of a pay cut rather than have to make people redundant on the basis that, there needs to be people there to do the work when all of this comes back. And some of them are implementing some sort of sliding scale, setting thresholds for salaries at which you take different rates of pay cut. And I think businesses are having some success with getting people to buy into that. And it doesn't necessarily need to be a pay cut, does it, Amy? I mean, there can be some undertaking to make up the shortfall in that pay later on.
Yeah, absolutely. So one company I was working with a couple of weeks ago, they've asked their employees to take a pay cut. But one of the things they are doing, and it's something I've done in-house back during the recession in 2007, so it does work, is that once the company's financially viable, they've agreed to give back half of what they've taken from them at a moment in the future. So there's no promise there to when, there's no deadline, there's no promise as to how that's going to be paid. But if you are still in the business at the time that is viable for the company to do so, say they're taking 20%, you'll get 10% back at some point in a lump sum. And it's just another incentive to sign.
Yeah, Yeah, and all these various different sort of options that are open to employers. I mean, can they implement these for different segments of their employees, or whatever they implement, does that have to be implemented right across the workforce?
It's better to be. So, I mean, you've always got to look at fairness. So if, for example, you will always have some employees that want to be difficult, unfortunately. So if you don't do it fairly, and if you can't demonstrate a genuine business reason as to why you've done it that way, then you could get stuck. But as long as you've got a genuine business rationale as to why that person is getting something different to that person, then you're fine. You just need to be able to demonstrate it.
Yeah, absolutely. And what other measures can employers do? I mean, what about holiday entitlement?
Yeah, so holiday. So a lot of people are cancelling, doing a no cancellation policy.
Yeah.
So if anyone had holiday already planned over the next 3 months, they're not allowed to cancel it. You can ask your employees to take a certain percentage of their holiday over the next 3 months, so that you don't get back in August and everyone's got their full year's entitlement to take. Or you can force holiday. So you might want to enforce holiday over a certain period of time. There's notice for this, but all you have to do is the amount of holiday you're asking them to take times 2. So if you want them to take a week, you have to give them 2 weeks notice. If you want them to take a day, you have to give them 2 days notice. So as long as you give the correct statutory notice, then you can force holiday.
Yeah, brilliant. Thanks, Amy. Anything else you wanted to mention? Right, we covered it all, I think, haven't we? Tim,
Sorry, just one other thing. So if anyone's been made redundant already due to coronavirus, I literally just got off a conference call with the rest of my team, and what we're saying is, if it's after the 1st of March, you might want to apply for this furlough, and then if you get it, then reinstate them and make them a furloughed employee. Only because if you don't, obviously the government has put this in place, and as an employer you have to look at all other alternatives before you make someone redundant, and because they've said about backdating, it might be something that you want to look at. But obviously apply for it first, just in case you don't get it. But if you apply for it and you get it, you can look at reinstating those that have already made redundant.
Somebody's asked if we've got a group of employees in a similar job role, how do we go about determining who we furlough?
You need to do a bit of a selection criteria, so almost like a matrix. So you would score them. So does any of them have a disciplinary on their record? If they do, they would score less than someone else. What about absence? Obviously taking out anything to do with disability, but you can score them based on absence. You can score them on product knowledge. It might be what their portfolio of clients, how big they are. It might be any kind of future work that they've got in the pipeline. But you score them based on these things, and then who scores the least, then they would be the ones that go on furlough.
Yeah. Brilliant, thank you. And just quickly, Tim, going back to you, I know you've answered them privately, but there've been a number of questions around what counts within this 2.5 commissions, bonuses, etc. And what if you're a director and you're just taking, a minimum 10, 12 grand a year and topping it up with dividends?
The director's salary. So if you're a small agency and you followed your tax advisor's advice and have taken a small salary and everything else is dividend because that's the most tax efficient thing to do, that small salary is going to count against you in these furloughing rules. So at the moment we speculate that the grant is going to be based on the regular salary. The reference to regular salary was part of the Chancellor's Q&A after his speech when he was asked about zero contracts. So that's where we think it might only refer to basic salary rather than overtime and bonuses. But if a director has been taking the most tax efficient salary of about £8,632, it's 80% of that they'll get under these rules. So I'm afraid these rules aren't going to be terribly generous towards those directors. For what really, there is an awful lot of speculation, which I just continue to apologise for. It does, in my view, is it only applies to the basic salary. I think if what we've got is bonus and overtime in there as well, I think it's too open to manipulation.
Yeah.
And therefore, I think the government, in trying to control their finances, will reference the grant only to the basic salary. Taken from the employment contract or what's been going through the payroll. So where you've got people in a sales role who are on a very low basic and everything is commission and bonus, you may find that they suffer out of this regime.
Yeah, and while we've still got you, Tim, grants and business rates, there are a number of reliefs available there, aren't there? Although I'm not sure a lot of them will apply to.
Well, I mean, if I think of the audiences, if anybody's in the leisure, hospitality, or retail,
yeah.
then just shout on the private Q&A, and I'll deal with that. So put that to one side for a moment. The other grant, £10,000 of free money, is available to any business who is currently eligible for the small business rates relief. That means your property, your business property, has a rateable value of less than £15,000. That isn't going to be many places in London. I've mentioned it in a few coffee shops and bars as I've been in to say, have you worked out whether you're getting your grant or not? And you'd be surprised how small a unit needs to be before it's within that rateable value. But if you are certainly outside of London, if you do have rateable value of less than £15,000, you've got a grant of £10,000 coming your way. You don't need to do anything in order to claim it. Your local authority will be in touch and will send it towards you. Local authorities ought to have had funding from central government this week, so that hopefully is pending. If you don't know whether your business premises have a rateable value of less than £15,000, there is a government website where you can put in your postcode and it will give you your rateable value. If anybody wants that, ask in the Q&A and I'll find it for you in a minute and send you the link.
Yeah, okay. That's a good question that's come in. If after furloughing an employee, it turns out we just can't keep them on and we end up making them redundant, is there some clawback to the grant that we've received?
No, not as far as, I mean, let's not forget the furloughing rules. We're all fixating on them. At the moment, they're only announced for 3 months. They're covering from the 1st of March up to the end of May. Yes, the Chancellor said he'd extend them if he needed to, but he's spending £10 billion a month on this, so he'll also cut them as soon as he's able to. But if you're making somebody redundant during that phase, that's fine. That will kill off the employer's national insurance and pension liability that the business is retaining. There's no clawback as far as we can see on the grant given so far. Because not forgetting, the grant is just universal credit by another name. Yes, it might be more generous, but once these individuals are redundant and out of work, they're going to be claiming on universal credit anyway. So the government are expecting to pay out one way or the other.
True. Okay. Thanks, Tim. I mean, just sort of following on from the rates. I mean, I'm assuming that all agencies have gone to their landlords as well and asked for a rent holiday, and that seems to be fairly standard procedure. With varying success, some landlords are sort of umming and ahhing, some are just saying no, but everyone should be asking for that, and hopefully landlords will be as flexible as they can with that. Ian, have we got you still here? Yes, I think we have.
I'm still here.
Hi, you're still here. So, I mean, we sort of saved the most depressing for last, really. So Ian's one of our insolvency partners, or should I say corporate recovery partners. So Ian, I mean, this is fraught, isn't it? I mean, how do you know whether as a business you try and soldier on and carry on, or whether you just stop? At what point do you start putting yourself at risk as an individual?
I think clearly as a board of directors, you should always be reviewing the viability of your business. Now, clearly at the moment, there are really pressing times. Life is difficult. You can't expect maybe to get your debtors in as quickly as you would have done before. That all affects your cash flow. So in terms of looking forward, you've got to look at what ability you've got for grants and put them into your cash flow, see if that affects your viability in a good way. Also consider the loans that might be available to you, but remember you've got to pay them back. So, if you have got viability issues, there's no point taking a loan just to plug a cash flow hole now, because you've got to find a way of paying it back later.
I think that's right.
I mean, I think, as a board of directors, you're personally liable if you make decisions that are wrong decisions and you end up trading wrongfully, i.e. continuing to trade when you're worsening the position of creditors, and then a liquidator at some point in the future, should he be appointed, can go after you as a director. So as a board, you have to make very intelligent decisions and write down, document why you made certain decisions, because that's very important if you get looked at later by a liquidator.
How does a business know if it's insolvent or not? I mean, what's the technical definition?
Well, we'll go to the technical side of things, because I think the practical side is probably more important. But in theory, you're insolvent if your balance sheet is negative, i.e. your assets are less than your liabilities, or if you can't meet your debts as they fall due. So you've got a balance sheet asset-based test and you've got a cash flow test. And if you fail either one of them, you're insolvent. Now, in practical purpose, for practical purposes, if your balance sheet insolvent, that's not an absolute major issue now. And in fact, many companies are always insolvent from the moment they're effectively born. It's only if you can't pay your debts as they fall due will a creditor start pressing you. So it's very important, I think, that you look at your cash flow, understand if you can't pay your debts as they fall due, because that's likely to cause creditors to start asking you to repay. And when you run out of money, that's when you certainly will end up going into liquidation. So if you can go and get repayment plans from HMRC, if you can get payment plans from your funders, if you can go and get interest-free loans, all of that can help you with your cash flow and make sure that you can pay your debts as they fall due. It doesn't help, getting a loan doesn't help your balance sheet insolvency. You're just adding an asset to your balance sheet and a debt to your balance sheet. So the overall effect on your asset base is the same. So I think, if you're insolvent on a balance sheet basis now, unless the grants that you can get will help you, and I think you're going to struggle to get grants if you're insolvent, because I'm not sure they'll become available. It's going to be difficult to avoid facing an insolvency position. So I think looking at going forward, you've got to consider your cash flow particularly carefully and make sure that you can pay your debts if they fall due. And if you can't, that's when you need to start thinking about, as a board, ensuring that every decision you take is in the best interest of your creditors and not the company and its shareholders. Your fiduciary duty as a director changes when you're insolvent to act in the best interest of creditors rather than the best interest of the company.
And Ian, what are the personal implications for individuals if they continue to trade whilst the business is insolvent and whilst they knew or ought to have known that it was insolvent?
Yeah, I think it's whether you ought to have known, because often directors don't know their position. They don't have very good performance indicators. Their management information is either late or non-existent. And at the end of the day, that's still the director's fault. The director needs to know when he becomes insolvent. And if he continues trading and worsens the position of his creditors in aggregate, so we're not looking at one creditor compared to another, we're looking at the total amount of creditors. If they have worsened during a period when the directors knew or ought to have known they were insolvent, a director could be personally liable for the increase in the amount owed to creditors. And remember, as a board, you're joint and severally liable. So, in theory, a liquidator could go after any of the directors, whether they're a non-executive director, whether they're the finance director, or whether they're an operations director.
And correct me if I'm wrong, Ian, but this is more important to consider, well, it's all important, but when you're taking on new creditors. So is it conceivable that you could reach some sort of payment agreement with existing creditors and still take on new creditors?
Well, you shouldn't, when you're insolvent, you really shouldn't be increasing your credit. Now, obviously, in order to help you pay your debts as they fall due, it may be that taking some sort of loan of some kind may help you to pay those debts as they fall due. Arranging instalment options will maybe help you to pay your debts as they fall due. So they are solutions that can help. You just need to manage your cash flow and understand it and review it regularly to make sure that you're not in a position where you continue to trade and worsen the position of creditors. That's when you're exposed.
Yeah, absolutely.
On the good side, can I just say that, I'm talking a lot of bad news, and obviously insolvency is your last resort. What I would say, though, is that, you know, in times like this, I would hope that a lot of creditors are not going to be forcing your hand too quickly. They are going to be realising that it's hard for you to pay, and they're more likely to accept some realistic payment plans. So in terms of the can't pay their debts as they fall due, I'm hoping that a lot of companies will be able to talk to their suppliers and make sure that they can arrange a sensible payment plan. Of course, the issue is the debtors, on the other hand, are also going to struggle to be paid. So you're not going to receive your money from your customers, from your clients, as quickly as you'd like.
Thanks, Ian. Thanks a lot. I think that the questions have started to dry up a little bit. We had one question earlier, actually, was can we apply for the Corona Business Interruption Loan Scheme now as a sort of a contingency measure in case we need to use it later on? I mean, I think the answer to that is yes, but given that it will take a while for the applications to go through anyway, apply for it now if you think you might need it. You don't have to take it when it gets offered.
What we've got to remember is that it's the banks that are lending the money, so the banks still have to go through their normal procedures. I think the idea of the 80% bank guarantee is to make sure that perhaps the bank's credit department are more likely to grant the loan, and you'll get a yes in response than a no. You'll still need to show all your cash flows, you'll still need to show your forecasts, you'll need to show your historical information, and you'll need to show that you're capable of paying it back. The normal procedures to a loan still work, but on that last bit, not able to pay it back, perhaps if there were some queries that they weren't sure about, where they might have said no instead of yes, they might now say yes instead of no. But the trouble is you've got a lot of loan documentation still to be put together, and I'd be surprised if there's much in the way of loans coming from the banks in the next week or two. I think a lot of the issues over solvency is going to be about timing. Whilst these grants are available, whilst the loans are available, they're not available now, and businesses are going to have problems now. If the debts aren't coming in and there's now the pipeline is disappearing, what do they do?
I think that's right, Ian. I think, you know, that's why everyone needs to be applying for sort of holidays on the, or deferment of the PAYE and NIC payments. And actually, whilst you might be able to get these sort of the job retention scheme grants, actually asking employees to take a pay cut now, that's immediate. Everyone sharing the pain, going down this grant scheme route is going to take time to get the money in. And it's all about, you know, the phrase cash is king. Absolutely never has that been more important than now. It's all about the cash.
Now, you've got to restructure your profit and loss account now and get rid of as much of the unnecessary cost that you can, and maybe find new ways of getting money back through the door. And that's not so easy. You've got debtors out there that you're relying on, and suddenly only half of them are going to get paid this month because those companies have got problems with their cash flow. Yeah,
absolutely.
But always with these things, seek advice as soon as you possibly can. You know, from an insolvency practitioner, from your accountant.
Yeah, I think that is the key, and I'd say that to everybody. If you are in any doubt whatsoever as to whether your business might be trading insolvently or is about to become trading insolvently, because obviously much better to broach this and deal with it before it happens rather than after. If you think that's going to happen, even within the next month, get in touch with somebody, get in touch with us or whoever it is, you know, sooner rather than later.
So there's a good question on R&D.
And action it.
There's a good question on R&D tax credits, which would be relevant to quite a few of the
yes, I was just about to ask.
So the question is the R&D tax credit regime going to delay the repayments, or will there be delayed repayments of any amounts which are due? Well, I don't think there's going to be any actual move from government to delay it. If anything, they want to accelerate it and rather pay out amounts they know are due than have to agree deferred terms on PAY and VAT. But the revenues workforce are down. They're working from home like everybody else is. And I think, as the person asking the question indicated, resources are going to be redeployed. What we did have some success with one of our clients getting deferment of terms on other taxes where they said we've got an R&D tax credit claim coming, and that gave them an easier run of actually agreeing deferment terms on other things because the revenue knew that there was a bit of offsetting there. But yes, prepare for your R&D tax credit claims to be delayed, depending on who you've used to prepare those claims, whether you've done them in-house or an advisor. I would get chasing and see if you can argue your claim to the front of the queue.
Thanks, Tim. We've got about 3 minutes left, so I'll give another minute or so in case anyone else wants to pose any more questions. But I think I'm right in saying, Holly, that you're going to be running these sessions again anyway, so there will be further opportunities to ask questions on various of these topics.
Yes, absolutely. Oh, there comes some coming through.
Yeah, our next one is at 10 a.m. tomorrow, and that's with our law experts. So,
yes. The lawyers, did you say?
Yeah, so it's our partners, Kemp Little. So they'll be covering off a lot of similar topics, but obviously from a legal perspective. So corporate and finance, contractual issues, and employment-related issues again. Brilliant. Okay, so I think possibly no more questions coming through. Thank you, everyone. Extremely sobering stuff, but really, really useful. We know this sort of advice is critical to everyone at the moment. So as we just mentioned, we will absolutely, we have the 10 a.m. tomorrow, but also I know Esther and the team have said that they will, as the government update and respond, they will be able to run more of these. So we're actually in the process of, so we have literally an event every day this week. And then on Thursday, we'll release the events that we'll be hosting next week. And we'll continue like that for as long as the demand is there, because we know time is of the essence. So everyone will get a follow-up email as part of this. Any links that were mentioned, we'll make sure they're all in that email. This is also being recorded and will be available on YouTube. And I'd also encourage everyone to sign up to Slack if you're not already. We have a different channel there, a COVID-19 specific one as well. If you are not on Slack, email anthony@bima.co.uk and he can invite you. So thank you, everyone. Yeah, really useful. I hope you all have restful evenings. And we will speak tomorrow morning if you're on the call tomorrow morning, or if not, later in the week. Thanks. Thanks, Esther.
Thank you.
Thanks, Tim.
Thanks.
thank you, everyone.